All right, welcome to January 17th, a bit of a sell-off today. Before we get started, this video is for information purposes only. Please do your own due diligence before you make investments in the stock market. Okay, so today let's do a sector review to see where the indices are at, and then maybe we can look at some single stocks to see what is showing strength so far. So what happened today? Well, we ever since the options expiration, so ever since this week started, we've had two gap downs. So let's first go ahead and mark those on the chart. So you can see here, this was the first gap on Monday, or actually Monday was off, and you can see a very large gap today that was formed. So is this bullish? No, definitely not bullish. But let's see where we're at. So currently, we are below this anchored VWAP level from the previous highs. This is from the start of the year or the end of last year, end of 2023. So these are going to be now resistances as we try to maybe move up and have a sideways consolidation pattern. So two things could happen here. We could have a sideways here and then a further breakout, or we could break down here and start to test the top of this trend line that we've discussed before and drawn for a while. In order for that to happen, the risk off element would be a loss of this anchored VWAP level, and you can see how this level caused a very strong bounce last time, and so that would be a key level, which also coincides with around the 4710, 4700 level. So a loss of the 4700 could really accelerate this sell-off further. But so far we have lost some key supports, which was the anchored VWAP line from these previous highs. You can see how all through the last sell-off, this was acting as resistance. And this last sell-off, I mean by the sell-off in the first week of the year. And then once we bounced off of here, we had a very strong day, which got through this previous resistance and the AVWAP line. And then we can see how that was acting as support when we got through it. But now that we're below it and most likely going to close the day below it, that line, which is around the 4750, 4745, is going to start acting as resistance. All right, so a bit of a different dynamic now. And this could also be leading up to the options expiration, which is on the 19th. So 2 days from now, we have a very major options expiration, where a lot of calls, a lot of leaps are going to be expiring. So equally weighted S&P started to break down a bit before. Could have possibly used this as a signal for a topping formation here. And what is another thing to note? You can see that there is a gap here, right? And there is a gap here, right? So RSP showing a bit of kind of like an island formation to the downside, and these could be very strong reversal formations or changes in trend. So you can see that this, because the island formed to the top side and we started to break down, this would be a topping island formation. And if the same thing happened, something like this to the bottom, this would be a kind of bottoming island formation. And then you can see a trend resume from there, a very strong one. So something to keep in mind that this island was formed starting this week on Tuesday. Not as easily visible on the weekly, you can see. So the daily is where this would be. And so if we do have a bounce back here, then this would start now acting as this gap that we established on Tuesday would start acting as resistance. And you can see again today a big gap here in RSP. Right. QQQ, if we look at the daily, what happened today? Well, we tried to further sell off, but today the anchored VWAP, which was the from the end of the year highs, that kind of came into play and pulled the market up, or pull the QQQ up here, and didn't let it slide below it. So that's currently acting as support. A loss of that level, which is somewhere around the 404, 405 level, would mean that their sell-off might be deeper. And another thing we can do is, this is a bit of a messy chart, but the breakout basically happened from this level. So if we draw this anchored revap from this breakout, you can see there's another support coming through on the QQQ. But I like SPX because it's much cleaner. You can see the breakout levels and the support levels. It's adhering to it in a much cleaner way. So that's what I like to assess the market strength by, at least for now, until we can get a cleaner chart on the QQQ. XLK, the tech sector, actually holding up pretty well, down 0.6% today. We could see that this zone that we had drawn based on where the buyers and sellers have fought before, that held, XLK held that level here, which is a sign of strength. But what did happen today is a loss of 5-day. And especially if we close below the 191 level, 191.7, that would be a closure below the 5-day, which doesn't mean you sell away and run, but it would sell everything and run, but it would mean that you start becoming a little bit more cautious. That the trend, at least the bullish trend, is starting to weaken here. But yeah, definitely not one of the worst areas so far affected by this sell-off, the tech sector. XLP really not doing much here, which is at the bottom of this, the sell side resistance that we had marked before. It is consolidating here. So consolidation is good. It could mean that we could move higher in consumer staples. It's still not one of my favorite charts because of all this resistance that is in this zone. It's hard to kind of keep a track on where the sellers might actually hit this. SMH, actually not too bad of a day for SMH. It tried to go below and close below this previous area of, you can see where buyers and sellers have really fought twice now, back in December and now in January. And today tried to close below that and actually go below the, I believe this is the 20-day and the 5-day, but maintain the 5-day and the 20-day. So SMH remains one of the stronger sectors, and I'm going to mark this in green. It remains one of the stronger sectors of the group to start the year. IWM, and so this is sitting at kind of a key level here, which is marked by the top of a yearly. We can see now. We were talking about this yesterday, and that was still a little bit further to go, and now we are hitting the top of yearly. So could see some buyers resume here and come in and support IWM. So that would be something to watch keenly. Mid caps, I believe. Let's see the top of yearly on mid caps. So mid caps, I believe, have some more room to run here before they reach the support at 479. So could see some further sell-off coming through in mid caps, and that would also coincide, the 479 would also coincide with the 50-day moving average. So yeah, so some more weakness could come through in the mid caps. XBI, a little bit disappointing here, but we're not able to get through this. You can see that this has been a zone of previous sell-offs, and so again the sellers took control today. So yesterday we were trying to maintain the 20-day moving average, and we had a closure above it, but today was a gap down. And again, like many other stocks, we can see a few gaps coming in here in XBI, which would start acting as resistance on a move back up in XBI. So because of this overhead resistance now coming through because of these gaps, at this point until it kind of bases somewhere, either down here or forms a little bit of base, and then tries to take it out. Just a quick reversion for buyers to come in might see these sellers take control and further bring XBI down. So this will go down from the green list, get downgraded because of all this resistance now that we have to deal with, the override resistance. And that's what happens, like market moves, and your thesis needs to change and adapt accordingly. The worst thing you could do is stay rigid in your thesis when it's now starting to look a little bit, not as, I would say, not bearish yet, but not as strong or not as easy of a trade. It is time to kind of reevaluate XBI for now. Once we start to take, like I said, consolidate and take this some of these gaps and have a cleaner setup, that would be the time to look at XBI again. IYT, you see there is some demand and supply kind of fighting in these levels, so it's kind of sitting in those, but nothing to really be too excited about. Again, more gaps here coming through on IYT, and you can see gap, and then we tried to take them up, but you can see how these gaps now on the way up really start acting as resistance to these buyers. So IYT possibly further weakness to ensue. XLI again, gap today. So yeah, nothing crazy going on in XLI. Is still looking bearish. XLU. So XLU is interesting. I thought at least we would try to get through some of the zone, but so far seems like a hard rejection off of this sell side resistance that we had drawn. We are on the daily chart, so today we are going to get a closure below all these moving averages, including, I think, the 200-day, or this is the 50. 200-day was back here. So we are below the 50, below the 200-day, so one of the weaker sectors now, XLU. So XLV, so this has been one of the stronger sectors to start the year. The breakout is still intact. We could, based on the depth of this pullback, we could see a check back to the weekly moving average, which is sitting at about 138. And if we go to the daily for a little bit more clarity, this one also has some gaps here. You can see the gaps. This one coincides here. So what could happen here is we do have some buyers and sellers fighting in this zone before, so they could there could be some demand that comes through, but for that the market needs to pick up. Otherwise, we could start seeing either a check back here of the 20-day, which would also coincide somewhat with the 5-week moving average. Until we start breaking down below the 5-week, we can still say that this uptrend is still intact. If we do start getting a closure and consistent closures below the 5-week, then we can say that there could be a retest of the breakout zone. And at that point, two things could happen: the retest could fail and we start dropping below, or the retest could succeed and the buyers come and support it and we get a further rise in XLV. So again, with the market weakening, this is also weakening, but you can see still some relative strength coming through in terms of the amount of the sell-off in XLV. XLF 38 was the key zone for selling, and we talked about that a few times, and the sellers did come through and push it below the 5-week. So XLF now is starting to look on the weaker side. ITB, we are on the weekly chart, so it looks like this week, I mean, we still have the weekly closure, 2 days to go for the weekly closure, but so far the weekly closure looks like below the 5-week. We have some, I think we have a gap here that acted as previous support, and buyers really came through, but a second retest of the gap might weaken it. We could test the bottom of the gap here at 96 before we move up or at that point we could fail further depending on the depth of the overall market sell-off. Consumer discretionary on the daily reached the 50-day, and the 50-day supported XLY consumer discretionary today. And if we fail at the 50-day, at that point we have this zone which could provide some support. Below that we have kind of very, I would say, sparse chart patterns. So a failure to hold these zones could really cause a fast sell-off in XLY. So 50-day to be supported, and then if not, then this previous demand and supply zone could act as support on the XLY. Microcaps weakening further. We did down another 1% today. A few gaps here, and on the weekly lost the battle with the 200 week and the 5 week. I guess was just too strong for it. Too many sellers sitting in this zone. So for now, the trend is down on IWC. XLE further down today, another 1%. It was trying to battle these zones, and so far it looks a little bit sideways. But after this consolidation breaks, we could see further test of maybe this 74 zone in XLY or XLE. XME metals starting to enter this zone where buyers and sellers have previously fought. We had a gap here that we closed today, but we did open a new one here. And another one here. So a lot of kind of very gappy type sell-off over here in the indices, and these gaps will start acting as resistance on anytime buyers start to step in. So there is some overt resistance coming in through the indices. TLT, an inverse indicator on the bonds. So we want this to go. So we want bonds to go up and yields to come down. That is usually bullish for growth stocks. And so far we are looking like the moving averages are kind of jumbling up here. So there could be some sideways here, and sideways itself is okay for growth stocks. Obviously up is better. You can see how strong the uptrend here was supporting the November rally. But here so far this could just be a pullback into further up in TLT, but not really showing us much here. The moving average here is the 50-day, which is below it at the 93.88, which could act as further support. Okay, let's take a look at NVIDIA. That had so what did NVIDIA do today? NVIDIA, this is a lot of lines over here, but these are just anchored revaps. It's telling us the support levels and the resistance and support levels on the 5-minute. And NVIDIA basically had a sell-off to start the day. It closed this gap here, you can see, and then found some buying strength. The buyers met with this resistance, which was this breakout, which is from the 540 to the 550 zone. This breakout, which happened on 16th, so that resistance kind of kept NVIDIA in check all day. Towards the end of the day, around 11 o'clock, we broke out from that, and we went up till about the 562.71. But this previous overhead resistance, which was formed yesterday on Tuesday, sellers are kind of coming through and bring this. So what would you like to see here for NVIDIA to continue? This 558, 559 support needs to hold. If not, then it is probably heading further down. You can see these three support zones, another one coming at 556 that could support it. But yeah, so that's where we are on NVIDIA. But overall, Not too bad today. We are down about 0.7%, but given how down the market is, this is still holding pretty strong. We were down a lot more today, and we were battling with the 5-day moving average, but you can see how NVIDIA held the 5-day. So which is, and also the AVWAP levels here. It's holding them so far. Let's see. You can see we are above the hourly AVWAP levels on NVIDIA and above the 5-day. So not too bad so far, but it needs to maintain that into the close today, which is about 50 minutes away. Boston Scientific looking like a good chart. It is a little bit extended from the 5-week, and you can see how this trend likes to hug the 5-week. So we could see a return back to the 58 level, or a sideways consolidation for the 5-week to catch up. So a bit extended to get in, but definitely one of the stronger stocks right now. SYK, again, a little bit extended from the 5-week, but we did come out of this kind of a sideways consolidation all the way from mid last year. So a breakout here could be much stronger, but need a supportive market for this to continue. MOD kind of check back to the 5-day and maintain that. So again, a stronger stock here. On the weekly, we can see a little bit extended from the 5-week. IBM, interesting. It had a bit of a sell-off today. It started the day strong and tried to break out further, but met with sellers. If you want to see the 5-minute, you can see how it was trying to break out, but then met with sellers, and throughout the day it was not able to kind of take that back after that. We went through NVIDIA. Groupon, I think, was previously looking decent, but you can see this ascending wedge formation and a breakdown from there. So far, starting from yesterday, Groupon looking bearish again. What are some of the other interesting stocks? AMD was interesting. Whole semiconductors ecosystem is doing decently right now, and you can see that we had this breakout yesterday, and then that is still kind of holding through. We are a little bit extended from the 5-day even, so a check back to the 5-day could happen at the 152, but so far it looks like the breakout is still holding strong. And you can see this flag pattern and AMD kind of breaking out from this flag. Right now, checking back, could possibly check back to the top of the flag before we break out further. But one thing I don't like about AMD, if I were to compare AMD and NVIDIA, although this is up 8% from the breakout level, and NVIDIA is up 12%. But the thing here I find is there's some previous resistance because of the previous highs, whereas in NVIDIA it's a much cleaner kind of a chart that could, in my view, in an exuberant market, go all the way up to about 670. Yeah, so Microsoft actually was another one that came through, and so far holding the 5 days, so that is showing some strength. But above it is the anchored VWAP. If we look on the hourly, you can see this anchored VWAP acting as resistance so far and pushing it down. But buyers are coming through in Microsoft and holding the 5 days so far. So that would be key. A loss of 5-day could mean that this breakout here could be retested, and at that point after retest could go further or could fail. Okay, Tesla so far holding that. So yesterday was the low was around 212. Today try to go a bit below that, gain some liquidity, and shot back up around the 215 mark. But we have a lot of overhead resistance here for Tesla to get through. So it needs to base here, form a base, and then maybe could see some upside here. But at this point, it would be more of a guessing game or a day trade type trade in Tesla until it forms a more stronger base to rebound from. All right, that was it for January 17th. I'll see you guys tomorrow.